You've probably heard the terms supply and demand, but do you know how it works in the trading world? Do not worry if not, because in this video, I'm going to show you how to use supply and demand zones to become a more confident smart money trader. Hi there and welcome back to the How to Trade YouTube channel. My name is Connor Woods, one of the trading coaches here, and in today's video, we're going to dive into supply and demand in trading. No matter how you look at economics, business, and other aspects of life, it often boils down to supply and demand. So, you're going to learn all about defining and using supply and demand as a valid entry zone for your trades. Not only am I going to run through the theory with you, but I'll show you how to practice this concept on the chart, giving you a genuine experience in using supply and demand. Enjoy. Okay, so let's first of all talk about supply and demand. Now, this is the backbone of anything to do with economics. It's all to do with supply and demand. Now, the law of supply and demand is to do with the interaction between the sellers and the buyers of a certain resource. In an ideal world, a market would be in equilibrium, where the demand matches the supply, and that's what you can see on the diagram in front of you. However, often this isn't the case, because there's various factors that can skew that equilibrium and make one greater than the other. For example, supply factors include things like production costs, taxes, regulation, but for demand, we're talking about consumer preference, fashion, trends, income, etc. Now, this has now been applied to trading the financial markets, with the idea being that you want to buy when the market's at its cheapest and demand is then likely to pick up. And you also want to sell when prices are at their most expensive. To do this, we need to identify supply and demand zones. That's how we apply it. And I've just drawn two examples here of a supply zone and a demand zone. Very, very similar to order blocks. If you know all about order blocks, you should understand supply and demand zones. What we're looking for is an area of demand where the price has been distributed higher, or an area of supply where the price has been distributed lower. That's how it's defined. Now, a supply zone is basically the previous bull candle before the move lower. So you can see I've marked that bullish candle, and then we get an impulsive move lower. That's our supply zone. That basically becomes a resistance area. Whereas a demand zone, we're looking for demand for that particular asset, and that's where we see an impulsive move higher, and we're looking at the previous bear candle, so the red candle before the move higher. So you can see I've drawn that there, so that will then become a support area. So supply, resistance, demand, support. Now, just some quick top tips really when I trade supply and demand zones. They do work on all time frames, but typically the more reliable ones are on the higher the time frame, so the reliability increases the higher up the time frame you go. They do work on lower time frames as well, but you'll find that the accuracy of them gets lower the further the time frames you go. We want to act on the test of these zones, remember, so we're looking to use them as support and resistance. It's a fancy way of saying support and resistance. The daily and the 4 hour are good starting points for analysis, and always remember that refinement can be very powerful. So you can start with a daily zone and then you can refine that down onto however lower time frame you want, if it's applicable. So this is Euro USD, okay? So straight away what we can see with the price action we've got here on the daily chart is what we're looking for where we got the most noticeable sort of break in structure. You can see this was this nice accumulation phase here. You know, this was our market structure high that we had. Market structure high, really clear, right? And then what happened here is we traded a little bit lower and then we snapped to the top side. You can see that really, really clearly. So this is our last piece of bearish pressure before the move higher. What happened here as well is, let me just quickly mark that zone. What happened here as well is we broke this high. That's the key bit. We want to see a break of structure. So now we can mark that as a successful break of high. So we now know that this is a zone where we'd want to do, you know, some business, so we say. This is where we want to act from. Last piece, I've got the body of the candle and I've covered just about covered the wick here as well. You can see what's happened here. Price has been trading, and then we can see we've already got that nice reaction. So even if you were just to keep it really simple and just go right, and this was a trade I did actually enter myself, and with a stop loss just below that supply zone, you can already see that, you know, we already hit a one-to-one trade here, so we're already pretty much running at risk-free. That's when I'd typically go to entry. But you can see we've got some targets we can hit above as well if we want to do that. Alternatively, what you may want to do is instead of trading just off of the demand zone, for example, you may want to wait to see that break in structure. Well, you can see that's happened here. We've gone all the way down to the 1 hour chart. There's our daily demand zone. You can see we've just now broken higher here. So potentially what we've got, where did this break in structure come from? And by break of structure, I mean this one. You know, because we broke above that high. Where did that come from? Well, it came from down here. Sorry, demand zone. So we could really use this as a next trade to then go higher. So that's the way we can use that and how we can spot those demand zones. Similar sort of situation on this chart as well. You can see that we was running down on this is on the DAX, the German index. We were running lower a little bit. You can see that we just had that initial snap higher. You know, we broke above, you know, I'd say a minor break of structure, but still a market structure high. Break of high here. Where did that move come from? The last piece of bearish pressure before the move higher. That is our demand zone. What happened here? Potential to go long at the entry of that demand zone. Look at this. Currently trading at 15.5 to 1, just from that initial breakout, from when we had that change in structure. So really, really powerful. You know, you can go up as high the time frames as you want. The theory, the base behind it is still the same. Gold prices trading high here. What's the, you know, this is since 2020. We're on a monthly chart. Real price consolidation. The first sign that the market wanted to go lower is when we got a break of this low here. You see that? The break of that low. Where did that move come from? That's what I always ask myself. Well, it came from this supply zone. Why is it supply zone? Because it's the last piece of bullish pressure we had before the rundown and that break of structure. What's happened here? As soon as we traded into that supply zone on a monthly time frame, look at that last month candle. Boom, straight to the downside. Potentially got a good monthly swing trade here as well. We can also look at it in terms of refinement and how we actually refine that. So you can see this is the Dow, the US 30. What happened here? Well, we were trading lower. Here we go, snap, break in structure. You can see that really clearly. There's that break of that high that we've got in place here. What happened? The market traded higher, broke a new structure. Then we had a little bit of a reaction here. So maybe what you would have done is gone long at that order block. Your stop loss sitting just below the wick of that order block. We would have traded, you know, 2 to 1. So maybe you'd have taken, or what I do is take half of the table at 1 to 1 and then move the stop loss to entry. But then we would take an hour entry. So then you ask yourself why? And this is the wick trick. When we get a situation like this, and what we see is a supply or demand zone, but we see a wick which either goes below the supply zone or above the demand zone. Trust me. What that means is within this wick, there's normally a lower time frame demand zone in this case, or a supply zone if we was to look at a bearish example. And that's the wick trick. So have a look for these wicks, because if we look on the lower time frame now, on the 1 hour, and I scroll that all the way across to where we just were, okay, that 4 hour supply zone we were in actually coincides to a much smaller underneath in that wick trick, a 1 hour supply zone here, the demand zone here, sorry. Look at that. And then we've suddenly turned a trade which was, you know, we took half and we got stopped our entry. But the reason we did is because we were yet to mitigate this demand zone down here at the bottom. You can see that, right? That's that last piece of bearish pressure before the move higher. We know it broke structure on a 4 hour time frame. Therefore, the best trade here would have literally been this. Really nice and tight stop loss. And this was an a huge trade. I mean, like a 1 in a year trade. But you can just see the power of refinement. You know, zero drawdown into that demand zone, snapped higher, 32 to 1, you know, and more. If you held it for that long, of course, you probably would have taken most off by then. But even if you just left a little bit, 52 to 1, that actually yielded at some stage. Absolutely incredible. And the way that we can use refinement to get a bigger zone down to that smaller zone. So best way to use it, we want to trade really off of the entry of that in the body of that either demand or supply zone. Stop loss just below and the supply demand zone is the methodology I use. Refining it down to maybe a 1 hour chart. You can go even further if you like, experiment with it. I don't tend to go too much lower than the 1 minute chart. That can be a really good way to use it. And also in conjunction obviously with the other concepts as well. One more trick for you is sometimes you get a situation where you're in the trade. Okay. So you're actually in the trade. So, NASDAQ, break of this low, okay? This is most recent. We broke this low. Where did that move come from? It came from this supply zone up here, the last bullish candle before the move down. Just got swerved, didn't we? Just got swerved. If we actually go down the time frames, you can see, and this is that refinement again, we actually tested really all we were ever going to test, which is that 5 minute supply zone, last sell to buy. There wasn't anything up here which would suggest a break in structure, is there? There was nothing that caused that, whereas this did. Supply zone, potential huge trade here. Okay, so this is a little trick that I've got for you. So if, for example, and I'll get rid of that, if, for example, we were faced with this and we was in a brilliant trade here, short, you know, from there, maybe we wanted to put our stop loss above this high to be safe. Where would our take profits be? Maybe here, because what we can notice here is within that 5 minute price action, you can see a demand zone. Okay? Because that broke structure to the top side, last bear candle before the move higher. This was a demand zone. May have expected some short-term support here. Still, you know, 1.49 to 1. Even if you'd have cashed out here and you'd have hit take profit, okay, what happened is we actually smashed through this demand zone because it's not 100% accurate. And the little trick for you, when we get a situation where we trade into a demand zone, or trade through a demand zone or through a supply zone, when we trade through it, that then becomes a mitigation area. Okay, so this is slightly more complex. It may take you a couple of times to watch it, and that mitigation area we can actually get in at some sort of retest. Okay, so we can see that mitigation area coming into play. What happened here? We come and retested. That's a good idea to get a re-entry here, you know, on a lower time frame, like a lower time frame mitigation area. You know, a trade I'm actually in as at the time of recording this video, and you can actually see how beautiful that's played out. Really nice, 14.3 to 1. So mitigation area when we trade through a supply or demand zone, and then we can then act on the retest. It's almost like a re-entry level, should we say. So there we have it, supply and demand, your zones of interest in the smart money trading world. This video has now given you an insight into supply and demand in trading and shown you how you can use it to enter live trades in the market. Like any concept, this is not 100% accurate and it requires patience and experience to master, which is why I would suggest practicing this as much as you can now to make sure it's really settled in your brain. If you have found this video helpful, give it a thumbs up and share it with other traders who could benefit from this knowledge. And do not forget to subscribe, hit that notification icon so you never miss out on any future content. There is also a link to an article on this in the description below. Thank you for watching and happy trading.